Welcome to Tesla Daily News Podcast. I'm your host, and today is Monday, January 5th, 2026. We're covering the biggest Tesla developments shaping investor sentiment, a major competitive shift with BYD, a high-power charging milestone for Tesla Semi, fresh regulatory risk in China, and what reliability headlines could mean for demand and margins. Story 1. BYD just took the global battery electric crown, and it changes the narrative heading into 2026. Context. For years, the market has treated Tesla as the default category leader in full battery electric vehicles. That leadership position matters because it supports premium valuation multiples, especially when growth is slowing. Details. Multiple reports in today's article set say BYD officially surpassed Tesla in full year 2025 all-electric sales, with commentary noting it wasn't even close. Separate coverage also frames this as Tesla losing the title of world's biggest EV seller, with competition and shifting demand dynamics in the mix. Impact. This is not just a bragging rights headline, it can pressure analyst models in two ways. First, it raises the bar for Tesla to prove it can re-accelerate unit growth without sacrificing margins. Second, it strengthens the bear argument that EVs are becoming more like a traditional auto market, more competitors, more price pressure, and less room for outsized margins. If Tesla responds with pricing or incentives, that can support deliveries, but risks gross margin compression, which typically matters more to the stock than a small delivery beat. Takeaway. Watch Tesla's next delivery print, and any pricing moves closely. If Tesla can hold demand without aggressive discounting, that's a positive signal for margins. If not, expect more debate about whether Tesla's valuation needs to converge toward a more auto-like multiple. Story 2. Tesla showed the semi-charging at 1.2 megawatts, a key step towards scaling commercial trucking. Hook. Tesla just demonstrated semi-fast charging at a level that makes long-haul electrification look practical. Context. The Semi program has been a long-gestating piece of the Tesla story, and investors have wanted proof that both the truck and its charging ecosystem can work at fleet scale. Commercial vehicles are about uptime, charging speed, and predictability matter as much as range. Details. A newly released Tesla video shows the Tesla Semi charging at 1.2 megawatts. That's an order of magnitude jump versus typical passenger EV fast charging, and it points to the high-power charging architecture Tesla has been teasing for years. Impact. If Tesla can pair this kind of charging with real-world reliability and competitive cost per mile, it opens a path to a meaningful new revenue stream, not just from trucks, but from charging infrastructure and energy products that support depots. For the stock, the nearer-term question is timing. When does Semi move from limited pilots into true volume production, and what does that do to automotive gross margin and capex? Faster charging is an enabling technology, but the financial story depends on manufacturing scale and fleet contracts. Takeaway. Investors should treat the 1.2 megawatt demo as a de-risking data point. The next confirmations to look for are large repeat orders, evidence of consistent delivery timelines, and signs Tesla is building a standardized charging network for fleets. Story 3. China is banning fully flush, electrically retracting door handles by 2027, and that's a quiet but real product and cost risk. Hook. A new China safety rule could force Tesla and other automakers to redesign a feature that's become part of their premium look. Context. China is Tesla's most strategically important manufacturing base and one of its most competitive demand markets. Regulatory changes there can move faster than redesign cycles, and redesigns can add cost, slow production lines, or trigger rehomologation work. Details. A report says China will prohibit purely electrically retracting, fully flush door handles starting in 2027, citing emergency safety concerns. The rule affects many global luxury models, including Tesla. Impact. On its face, door handles sound minor. But investors should think in systems: new parts, new suppliers, new tooling, validation testing, and potential effects on assembly efficiency. If Tesla needs mechanical overrides or alternative designs for China-built vehicles sold locally or exported, it can marginally increase bill of materials and complexity. Complexity is the enemy of margin. Takeaway. This is a medium-term regulatory headline, not a tomorrow morning earnings issue. But it's a reminder that Tesla's China playbook isn't only about price competition, it also depends on staying ahead of local compliance, without fragmenting designs across regions. Story 4. Norway is almost fully electric, and Tesla is still a major player, but share is slipping. Hook. Norway just posted roughly 96% EV share in new registrations, and Tesla's position there is a useful signal for mature EV markets. Context. Norway is often a preview of what high EV penetration markets look like: intense competition, high consumer expectations, and less early adopter pricing power. Details. One report cites that in 2025, about 95.5% of newly registered cars in Norway were electric. It also notes Tesla Model Y remained a top seller, but Tesla's market share was about 19.1%, and it mentions Tesla being down around 9%. Impact. For Tesla investors, Norway is less about absolute volume and more about trend lines. When EV penetration is near saturation, growth comes from replacement cycles and brand switching, and price sensitivity increases. If Tesla's share softens in that environment, the market may extrapolate similar dynamics to other regions as EV adoption matures. Takeaway. Track Tesla's share, not just deliveries, in mature EV markets. If Tesla can stabilize share without steep price cuts, that supports the bull case that the company's cost structure and software ecosystem can defend profitability. Story 5. Reliability headlines are back, and they can influence demand, resale values, and leasing economics. Hook. Consumer report-style reliability narratives can become self-fulfilling, even if they don't capture every owner experience. Context. Tesla's demand engine is part technology, part brand, and part economics. Reliability perceptions affect insurance costs, resale values, and the attractiveness of leasing, all of which can impact monthly payments, which is where most consumers make purchase decisions. Details. One article highlights that used Tesla's ranked last for reliability in a 2025 Consumer Reports study, with a reported score of 31 out of 100. And it mentions issues like suspension problems and battery wear concerns. Impact. If this narrative gains traction, Tesla may face more pressure to offer incentives, warranties, or more aggressive leasing terms to sustain volume, especially in a softer macro environment. That can reduce per-unit profitability. On the flip side, if Tesla improves service turnaround times and quality metrics, the market can rewrite the story because reliability improvements can lower warranty reserves and improve customer lifetime value. Takeaway. Watch for Tesla commentary on service capacity, warranty costs, and quality improvements. In the near term, perception can matter as much as engineering. Story 6. Elon Musk's Starlink move in Venezuela highlights the Musk ecosystem effect on Tesla sentiment. Hook. Musk announced free Starlink service for Venezuela for a month, and it's a reminder that Tesla trades with a leadership premium and leadership volatility. Context. Investors often price Tesla not only as an automaker, but as a platform tied to Musk-led ventures across energy, autonomy, robotics, and space. That can amplify sentiment swings when Musk is in the headlines for non-Tesla actions. Details. One report says Musk announced free Starlink services in support of the people of Venezuela, following the capture of Nicolas Maduro. Impact. This isn't a Tesla revenue item, but it can affect Tesla's stock through narrative. For some investors, it strengthens the brand of execution and global reach. For others, it increases concerns about distractions, political risk, and reputational spillover. Markets don't need this to be material to react. They only need it to shift marginal buyers and sellers. Takeaway. Tesla investors should separate sentiment noise from fundamentals. But don't ignore sentiment entirely. Tesla has historically been highly narrative-driven, and leadership headlines can move the stock even when cash flows don't change. Before we wrap, quick risk note on scams. There's also chatter about a newly registered suspicious domain, musk26.com, flagged as low trust by security evaluators. If you see donation requests, investment opportunities, or crypto tie-ins using that branding, assume it's a phishing risk until proven otherwise. Let's close with the big themes. Today's setup is clear. Competition is intensifying with BYD taking the 2025 global BV crown. Tesla is showing real enabling tech progress with semi-charging at 1.2 megawatts. And regulatory plus reliability narratives are emerging as potential margin and demand headwinds. For tomorrow, keep an eye out for any Tesla commentary on deliveries, pricing, and margin strategy, because in this environment, the stock will likely respond more to profitability signals than to unit volume alone. That's it for Tesla Daily News Podcast. If you want this in your feed every morning, subscribe and follow us for daily Tesla updates and the investor-focused take on what matters for Tesla.